Thank you very much. I thought I gave you a glowing introduction, and you outdid even my somewhat hyperbolic presentation of you. It was fantastic. You put an enormous number of things on the table. Let me just start with a couple of questions and then open it up. We've got an awful lot of knowledgeable people here. You talked an awful lot about Europe, understandably, about your own country, understandably. Let me ask you a little bit about the global economy. You've been finance minister 7 years. You've seen now a succession of problems and crises. And as you mentioned yourself, we've had crises every 2 or 3 years for the last 20. Is something wrong with the global economic system? Are there changes that need to be made at the multilateral international level that could arrest this deterioration, one would have to say, of global stability and the way it affects all of our countries?
Well, I think we should realize that we are in the midst of a great transformation. The IMF has done a job report that I think has some very, very interesting data. If you look at the export-adjusted global labor force, people participating in the world economy, there has obviously been a tremendous increase over the last 20 years. But it will be as big increase for the next 20 years, when the rest of Asia and also Africa is going into the world markets and more people in Latin America is also entering. So there is a fundamental structural change. I think these structural changes also brings on a lot of uncertainty. It has impacts on financial markets, on evaluation, and creates a climate where bubbles are more likely to occur. Because one reason why you have bubbles is that it's very difficult to assess the real underlying productivity and therefore also real underlying return for an asset. So in such a fundamentally transforming time period, I think it's quite reasonable to think that we should have a lot of turmoil. Having said that, I also think we have a fundamental need for banking reform. I don't think that the work has been more than half done so far. We need to continue to increase capital requirement for quite some time. In Sweden, we are heading for 12%. I don't think that will be the end of the road. We'll probably try to push the banks further. Risk weights for risky activity, trading or mortgages, commercial property, I think will have to be adjusted upwards. The whole discussion of the Vickers report, what has been done here in the US about trying to create banks where you separate risky activity or at least demand more capital for risky activity, I think is also continuing. The banking system has a fundamental role to play in economics. The transformation of short-term liquidity to long-term loans, the life cycle adjustments and so forth, all of these roles are legitimate. But the costs and the turmoil that the financial system has brought over the last 20 years, I think makes it very, very clear that we have to deal with the financial system. And we are far from finished with that, to my mind. I think we will see continuous strengthening of supervision and tightening of regulatory structures on the banking system. But fundamentally, we should be optimistic about the world economy. I mean, the growth numbers that we have over the last 20 years are fantastic. China, Latin America, now we're seeing Africa. I think in the WEO, we have at least 8 or 9 African countries with above 7% growth. Market reforms, they can qualify for EMU, for euro. They have 30% debt level and the deficits are close to 3. They've been able to go through this crisis without building up fundamental instability. There is an in-depth study from the fund showing that this time around the fundamental setting for the low-income countries are much better. So fundamentally, the world economy is doing pretty well, probably better than it ever has done, but it's more turbulent and the financial system has to be fixed.
Let me ask you a question about the politics of what you just described. You stressed in talking about Europe the need for democratic legitimacy with the institutional reforms. Again, sticking to the global level, you talked about this huge increase in the world labor supply. It's going to continue another couple of decades. This is all in the emerging markets and developing countries. How do we get them to step up to play the kind of role in helping lead and manage and take responsibility for global stability that we like to think the US and Europe have done for the last century, but these guys are going to have to do for the next century?
Well, I mean, the concept that Bob launched of partnership and cooperation with China, and China as a strong, responsible global partner, I think I strongly agree with that. If you look, for example, of the World Bank report on China's long-term issues, where Chinese authorities and World Bank authorities work together, what you're basically seeing there is a move towards more of an open, democratic, and market-oriented China. If I would have talked to Swedish business multinationals 5 years ago, China would only be in paradise. Today they are aware that corruption is a major issue. They understand that you cannot deal with corruption without democratic reforms. They realize that there is a fundamental environmental problem that has to be dealt with. There is a Gini coefficient inequality problem that has to be dealt with, which is also true for many of the other low-income countries. So obviously reforms are necessary, but I also have the sense that there is a understanding of this among at least the Chinese leadership. There's a maturity in their worldview in terms of where China is going. So on China, I think one should fundamentally be optimistic. Then you obviously have issues of nationalism and environmental problems and corruption that eventually will have to be dealt with. But the answer is for them, I think, more democracy, more openness, to have the strong growth. Not as a drag on growth, but to a solution to some of the legitimate problems that is quite clear.
Okay, let's open it up. Bob, you want to take that entree and ask first question?
First, I want to thank Anders for taking the time to come over. I think it was an excellent presentation, and I certainly learned a lot. I got a couple quick questions. I mean, there's so many I could ask, but one, you touched on France. You're also a student of political economy. Obviously, in the history of Europe and the Eurozone, the Franco-German relationship is very important. At least the sense I get from talking to German business and political leaders is a lot of anxiety about with or France. So maybe you could expand on that. The second is, you make a very good case that if you want to have a welfare state, you need to have a fiscal conservative policy. Hope you're talking to President Obama too on this. But I think the question then is the politics of reform in the South. So, you know, I can sketch a muddle through strategy, I can follow your logic, but what I'm increasingly uncertain about is how long the politics of this can last. When you look at the decline in output, they're really matching the types of conditions in Great Depressions or after wars, and you know, to extend this for a decade, I just don't know whether the political system can sort of manage that. And then third, while your presentation is on fiscal, a lot of people here have been focusing a little bit on the monetary, and without getting into all the aspects of it, let me just put this question. Without necessarily being critical of monetary authorities yet, there's clearly the chance that we're planting the seeds of another future crisis here. And it was interesting, Martin Wolf's piece this week was talking about, oh, we don't have, you know, inflation. He's doing the same thing Greenspan did. He's only looking at goods and prices. He's not looking at asset prices, okay? And as I look at asset prices, bonds, sort of equities, farmland, I get a little nervous. So what do you see on the monetary side in planting the seeds of a future crisis?
Well, I would actually be on a slightly different take than you are, Bob. I think it's good that Bank of Japan now has done what they probably should have done 20 years ago. If you are at zero boundness problems with an asset vicious cycle that they've been in, they should have dealt with the banking system, as we all know, in a much more efficient manner. But given that they didn't do that, I would argue that the fact that they are now pushing the yen is a very reasonable response for 20 years of deflation. And given that the US monetary authorities, I mean, one of the best pieces on this is actually written by Ben Bernanke. For me, it's very strange that the US government is starting to raise issues with competitiveness devaluations from Japan. This is what all US authorities have asked for from Japan for the last 20 years, and they are now finally doing what is reasonable. They need to get inflation going. I'm a friend of price stability, so it's a strange feeling to say that, but in Japan you actually need some inflation. They also need fundamental structural reforms, quite clearly. The labor force participation, they have the world's best educated housewives, which is obviously not very efficient. When it comes to Europe, I would argue that the risk of price inflation is very limited. There's basically very limited wage growth, and if you look at unit labor cost for a big closed economy, which is probably the best and most important indicator of inflation, is extremely low in the euro area. Even the most on the high side forecasts are well below 2%. So I would argue that I'm more worried that the central banks, at least in Europe, I mean, it's different with the US. I mean, you're further away into the recovery. But in Europe, how can we square the problem with contractionary fiscal policy in Southern Europe, deep structural reforms to increase productivity with layoffs? I mean, look at Spain and Greece. Fundamentally reforming a domestic sector will cost jobs. So under those circumstances, with open output gaps and the need for contractionary, at least not expansionary fiscal policy, it's quite obvious to me that you need to have support from monetary authorities, at least in Europe and Japan. You could argue that the US might have some bigger problems, but even here I would argue that you're quite long away from being at long-term unemployment. When it comes to France, I think the government, the Minister of Finance Moscovici is trying to move them in the right direction. The Article 4 report from the fund has a very telling number of charts where you clearly see that in terms of labor cost and productivity, in manufacturing they look like a twin to Germany. Very similar. Not fantastic productivity, but very low wage increase over the last 10 years, which means that they've done decently well. The domestic side, it looks basically like Italy. So the domestic sector in France is completely overregulated and inflexible, and that has to change, because no economy can bear global competitiveness with a large, inefficient and costly domestic sector anymore. That could have been an alternative in 20 years ago, but today I think the cost pressure from the domestic sector feeding over to the export sector kills off your competitiveness. So I think France needs to do quite fundamental reforms. I think they are very much aware of this. The political economy, well, then I actually go back a little bit to the monetary side. I cannot see how Spain, Italy, Greece, Portugal can go through this, and obviously also Ireland, without having support from the monetary side. If they are going to live through a period of not only restructuring of public finances, but also fundamental productivity reforms in the domestic sector, the only way to get that reasonably well functioning is to have a very expansionary monetary policy. The problem with this is that everybody seems to need devaluating currencies and expansionary policy. So, but there is a risk in this, and that might be what you're also referring to, that we might get into something like a 94 situation, that when the US start to tighten or stop doing quantitative easing, you could see a heavy reaction in the financial markets, where the bond sell-off and moving into US equity and can create some quite problematic and turbulent situations.
I can't resist asking a quick follow-up question, then I'll go to Joe. You just noted that everybody wants to devalue, and in your remarks you said within one breath, Sweden's running an 8% current account surplus, but we sure do not like that upward pressure on our exchange rate. If a country with an 8% surplus doesn't accept some appreciation, how does everybody get accommodated?
Well, I mean, it is to some extent, I think, a structured situation. It was only last year that we become net balanced in accumulated the current account. So we built up huge current account deficits in the 70s and the 80s. So we don't have a large positive net position like Switzerland or Norway or South Korea. We are basically in long-term balance. I cannot see why we should run 7% current account surpluses. That's not something that we appreciate or target or in any way see as something good. The problem, though, is that if you have an industry structure which is very commodity-based, particularly paper and pulp industry, where you also have newsprints going down and newsprint prices are going down, it's quite clear that we will see some quite difficult structural changes in our industry because they have become used to having a soft currency. And it's very difficult to see how the krona would do something else than gradually and slowly appreciating in the years to come. So for us, that will be a drag on growth, I think, and eventually will obviously also mean that the current account will go down.
Okay, Joe.
Yeah, I'm Joe Gagnon with the Peterson Institute. You actually partly answered my question when you were talking about monetary policy, but let me state it anyway, and maybe you can go further. I can't speak for all U.S. economists, but certainly I know many of us actually do share almost exactly your interpretation of the structural issues in Europe, in structural reasons why unemployment is high in Europe. And I mean, it seems to me, although you seem to hint that, I don't know if you would agree with this, that part of the problem in the last 3 years is that there's been too much focus on the fiscal adjustments in the past 3 years and not enough on the structural adjustments. I mean, they have both been talked about continuously, but if you just read the reports in the press, you can't help but have the feeling that the structural changes so far have not been nearly as aggressive as you would like, while the fiscal movements have probably been more aggressive than you would like, and I wish the balance were different. I wondered how you would feel about that. I note in particular you talked about the structural rate of unemployment in Europe as being very high at 9%, but of course the actual rate of unemployment is 12%, which is an enormous output gap, especially when you consider the rigidities that prevent firing in Europe. That means the GDP gap is much, much bigger there than in the US. So wouldn't it have been better to have rebalanced the past 3 years towards more structural reform and less fiscal consolidation? And could that have been done? Should not the ECB have been less conditional in its OMT and more willing to finance some slower fiscal adjustment? And then, of course, maybe that would go along with easier monetary policy. It seems to me that's what American economists are concerned about. It's not the structural. We understand the structural. It seems to me we understand the structural problems, but relative to the structural position, there's a huge output gap there that would be amenable to policy.
Well, I agree with basically everything that you're saying. If I was a US economist, after the crisis with the Lehman crash, it was quite obvious that there was a severe demand contraction and an expansionary monetary policy was called for and so on, very reasonable. The problem in Europe is that if you spend 60-70% of the time in the US talking about demand and house prices and so forth, in Europe we need to spend that 60-70% talking about our structural issues. How to get the regulatory barriers down, how to strengthen our entrepreneurial climate, how to improve our education system, and how to bring innovations into actual market production. And this is particularly true for Southern Europe. So I think the basic feature of the crisis was a banking crisis in 2008 that gave a shock that clarified that Southern Europe has priced themselves out of the market in a 20-year process. Part of that has to do with lack of monetary control in the currency union, because it's quite clear that cheap credit stemming from interest rate convergence has pushed the construction sector in Spain, and it fooled the Greeks to believe that they were much richer than they were and so forth. But fundamentally, when you took that away, there is a huge productivity problem. I think the total factor productivity from the OECD of Spain is minus 0.2, 0.3 since 1995. We all know that wealth is total factor productivity. You cannot run an economy with almost close to zero total factor productivity without getting into serious imbalances. That's not possible. So in that respect, this is fundamentally a structural problem. I would disagree on the fiscal side. When France now is getting another year and Spain is getting another year, if you go like in Spain from 10% deficit in 12 to 7% in 14, I wouldn't say that that's a fiscal contraction that is exaggerated. I think you're basically doing what is absolutely necessary not to run up a debt level that would be unsustainable in the long term. The world markets are accepting the US as a safe haven. So you can see 10-year bond rates running around at close to or even below 2%. with a high debt level. And we all should be happy if that continues, because the day when the debt market is starting to think that can we really trust the US, then we will be in deep problem. So I also believe that the US has to deal with the debt problem, even if it's not that acute. And I also agree with your third point, that it's quite important that we keep monetary policy expansionary in this environment. I think the logic of the ECB was, it's quite clear that the Spanish have almost a program. They do everything the Commission and the fund is arguing for. So if they just ask for a program, you would do it like that. You would just assess the current policies and say they are along the lines what is necessary, and then you could start the OMT. Fine. But how do you deal with Italy if you don't have a government? So conditionality is good, but if you run into real problems in this case, you probably have to throw out conditionality out the window and just continue with expansion and monetary policy. So, and I think Draghi has been a major shift in his commitment to the Euro project has been a major shift in the sentiment of the markets, but that has to continue. And eventually I think they will have to deliver on their promise and do more measures to stabilize the bond market.
Herbert?
Two questions.
Good friend Herbert Oberhansley from Nestle, from Vevey.
Thank you for an excellent presentation. The first point, you now quickly mentioned the euro, but it didn't come up very much. And let me ask indirectly, during the worst time of the crisis, was it an advantage for Sweden to be not a member, or disadvantage? How do you see that? Second point, about the debt situation of particularly also European countries. The big elephant in the room are the contingent liabilities, and there is quite some intransparency. Bank for International Settlement did some estimates, you probably know them. France, for up to 2040, debt ratio to GDP going up to 400%. Even if they keep age-related payments stable, which would mean cutting the pensions half if the number of old people increase, still an increase to 200%. So an accounting of the states, which is medieval, basically, to say company couldn't do that. So how do you see how to address that? First, the transparency issue, then the political issues, which are much bigger than what probably is right now discussed, and then the probably easier question about the euro and Sweden with the krona during the worst days of the crisis.
Well, if you look at Finland and Sweden, and you take out the fact that Nokia has not been a success, there is huge similarities. Unemployment is moving basically together. Industrial production is moving basically together. GDP numbers look almost the same. And Sweden and Finland are quite similar. We have quite similar industry structure. We are a little bit more diversified and a little bit bigger, but basically very similar. So you cannot say that the Finnish experiment has shown that they have had a much worse economic development than Sweden. Quite clearly in 2008, when the krona depreciated very strongly from 2008 autumn to spring 2009, that was beneficial. That was a buffer for our economy. At the same time, when we are now, our debt level is 40%. We have the lowest inflation number in Europe, a very credible central bank. We have had a total factor productivity that is basically well above the rest of Europe. I would argue that we've been on average, well, the last 20 years you've seen growth around 2.5% in Sweden. So it's not very likely that the currency will stay weak. It's more likely that we will get the opposite problem, the Israeli, Chilean, South Korean, Switzerland problem, that you have a currency that becomes overvalued. And that's quite problematic for a export-oriented country like Sweden with a strong manufacturing industry. We are not Switzerland. We are not in pharmaceuticals and banks. We are in paper, pulp, trucks, high-techs, drilling rigs, oil construction. We are basically kind of a mini Germany in terms of manufacturing products. So for us to have a development where the exchange rate is drifting away could be quite problematic. And let's remember that we have a very modern banking system. So 50% of the financing is exchange rate related wholesale financing. We don't have direct access neither to dollar or euros. So the Riksbank is now increasing their reserves. I think we will probably have to find a construction where we are taxing wholesale bank financing in currency and put that into the currency reserve. We need to build much stronger currency reserves moving forward. The Riksbank has done a tremendous job to take them up, but I think we need very strong currency reserves in this situation if we are going to stay outside of the euro, which seems to be very likely given the population is 80% against joining. So we will stay out for quite some time. It would obviously be much safer to have a big banking sector inside of the ECB umbrella. But on the other hand, we will have to deal with it. We will have to make it stronger and increase capital requirements. Well, I don't think we should say that the problems in France and in Germany and other European countries are unsolvable. I mean, we are becoming a lot older, but people can also work longer. Why should we have a fixed pension age that was set when the average age of the population was below 60? And continue with that when people are living, most kids today born in Sweden will live past 100 years. So they cannot go into pension when they're 65. And this is also true for Germany and for France and all of the other countries. And I think it's very reasonable to convince the voters that we need to have some automatic balancing in the pension system. And it should not be that we're cutting pensions. That's not the welfare optimal solution. I think it's much more better to increase the pension age. Healthy people can work much longer. I mean, in Sweden we are seeing the strongest employment growth now above 60. And to a large degree we are seeing people with better education staying on the labor market well above 65. And why not? I mean, if you enjoy your job and if you're having a good time at work, which is the kind of job that I have, I mean, why go home? I would never stop at 65. I wouldn't even think about it.
I was saying to Anders that I'm turning 72 next week, and I'm now back working full-time here again at the Institute, and looking forward to decades more of good success. So I'm an example of what he's talking about. Jacob.
Jacob Kierkegaard from the Peterson Institute. Two quick questions. I noticed when you're talking about the banking union and the importance of it, you also said we are building a banking union. Should I interpret that as if Sweden intends to join the banking union? And if so, when at the same time you talked about 12% capital for banks in Sweden, which I would interpret to be quite a lot higher than what will be the European average, what would be the conditions for that Sweden would need to have sort of squared away, both with respect to joining into a structure like the ECB where non-Euro members are clearly not directly or actually by the treaty not allowed any influence? If you could talk a little bit about that. Second quick question. You talked a lot about the democratic deficiencies in the European project, and I think it's something that I very much share. And my question then is that when we think about the centralization, the necessary centralization in some ways, which I think you also alluded to, on, for instance, things like fiscal surveillance, the six-pack, the two-pack, the European semester, etc., the degree of transfer of fiscal sovereignty, if you like, to the European Commission that has already taken place, is that in the long run politically sustainable, or does it actually in the long run, and by that I say, let's say 5 to 10 years, require a fundamental change of the political institutions in especially the euro area, so that you transfer more direct democratic accountability to these centralized institutions in Brussels?
To start with the banking union issue, the structure is that ECB is the supervisor. The legal structure is such that the ECB Council, where only ECB member states are part, have voting rights. So for a country outside the Eurozone to join would mean that when things get really rough, Sunday night at 1 o'clock, when you have to close down a big bank or cut up a big bank, you have 3 hours to do it before the Japanese market open, then it matters who votes. It really matters who will take the punishment and how the decisions are made when we're talking about quite a lot of money. So I cannot foresee us joining until we have equal standing in the Council. Therefore, I was very much I think we saw some progress at the informal ECOFIN last week because but primarily the Germans, we were just supporting them a little bit, said that this has to become a treaty change, because if you get the treaty change, you could have equal standing and you can have a firewall between monetary policy and supervision, which is what the Germans are asking for. But if you have that firewall, it's also quite obvious that all the countries that are in the system can vote on equal terms. Then you have the issue of banking resolution and deposit insurance. Sweden have a peculiar way of dealing with banking crisis. We are actually only willing to put tier 1 equity into banks. If a bank runs down its capital, we will take it over. We don't believe so much in the bail-in side of things, because if you have a system where you take over a bank when it's bad, that bank is back in the market the day after. The day after Kaupthing opened, after Iceland collapsed, we did not have any people standing in queues because we had taken over the bank. We have resold it to the market. We actually made some profit on that. But there was no run on the bank. There was no liquidity problem for the rest of the banking system, not even in the morning. It was, everybody knew exactly what had happened. Iceland had collapsed. We took over Kaupthing. Depositors were clear that they would get their money. If you start to get on the financing side of banks, you might get into a problem that you have one bad bank, but that means that the average of the banking system is worse. So then you have another bad bank, and then the average is even worse, and then you have a negative spiral. So I think we need to work with an equity tool when it comes to crisis resolution, and we're not there yet. So I'm a little bit worried that where we're heading when it comes to banking resolution. It cannot be that we are thinking that the state only can take over bad assets, or put banks into transition companies that would then be returned to the owners. If a bank goes bust, the state should take it over and then resell it and earn the profit, so that you safeguard the taxpayers' money. I know that this is controversial here in the US. Banking socialism, I remember, was the word in 2008 and 2009. It's very controversial in France and Germany, so they're very reluctant to it. But I think we need to push this case further. So it will take some time before Sweden is in the banking union. It needs a treaty change. So therefore, I think we need to strengthen our banking system outside of the system. And I said 12%. I'm not said that's not the end of the road. There are also countercyclical buffers and so forth. And I think we really need to have a strong banking system.
Anders.
Thank you very much. Excellent presentation. I would like to follow up a bit more on what Jacob said here about your attitude to the European Union as a whole, how you see it developing and how you would like to see it developing. Do you see it as being three rings? One, the EMU, other countries like Sweden, Poland hanging outside a bit, and then Britain being almost completely outside? Or do you see Sweden and Poland coming in to the heart? So that's one part of the question. The other, we are now seeing a clear division between the north and south. Europe is no longer divided east and west, but north and south. And because of all these support programs, the south doesn't have many votes in many discussions. And this could give a possibility for the northern free traders and fiscal conservatives to impose their views. How far would you like to go in that direction? And eventually, of course, we come to the question of a more federal system that in particular Guy Verhofstadt is now campaigning very strongly on. How do you see the EU developing?
Well, first and foremost, a currency union will only work if you have fundamental flexibility in the labor market and an ability to adjust productivity. So it cannot work where some of the countries have zero productivity rates, because that would force the rest to have also zero. Otherwise, you will build up eventually big cost differences. So you cannot have part of the union growing in much slower productivity rates. So therefore, the need for opening up markets and to reform the economic system comes directly from the currency union. Otherwise, it fundamentally is unstable. You also need much a bigger ability to adjust also in the labor market. Labor market flexibility and adjustment of use of resources has to be better if you're in a currency union. Fundamentally, I think this is reasonable arguments for having the currency union. It forces people to be more efficient, gives better long-term productivity growth, and therefore better welfare. The problem, though, is that you also need then to have a stable financial system. So you also need to fix the banking side of it. It has to be some kind of banking union, resolution schemes, and so forth. I don't know about the fiscal transfers. If you fix the productivity and the banking side, some people are saying that the big difference between the US and Europe is that you have all of these fiscal transfers in the US. That's a very strange argument. When we were talking about high productivity growth and low unemployment in the 90s of the US, nobody talked about fiscal transfers. They talked about the flexible labor market, the dynamic entrepreneurship of California and Silicon Valley, the IT sector transforming the US economy. So I think one is overstating the importance of transfers in the US. And I don't think that you could have a political, sustainable support for a transfer union in Europe. So therefore, I think you need to deal with it with setting the fiscal framework right so that you're not getting these kind of external effects. But obviously, then you need also to have the crisis part of it. And that, I think, there you have a role for fiscal federalism, that you're ready to support countries that has run themselves into trouble, obviously with conditionality and together with the fund and so forth. But there is a crisis resolution role where the ESM is I think, is a very reasonable instrument to use. I don't believe that Europe will become the US in terms of federalism. There is no political support for that in any European country that is widely based. If you would have a referendum in Germany and ask whether they would give up their Germanness, or particularly French, they would not be willing to giving up the sense of being French and becoming only Europeans. So therefore we will have to do this in a gradual and pragmatic manner rather than trying to see this as a future nation state. It is it's not a union between nation states because it also have legal implication that goes much on, but it's not either a federal system.
Nicola?
A
Okay,
question.
can I also get back to UK? And I think it's a key interest of Sweden and Germany to keep the UK in. UK is the most populous state in 10 years in Europe. It is one of the most dynamic economies, and it's fundamentally is the financial system of Europe. We don't have two big financial systems, we have one. And it's very difficult to see that you would have the financial New York in one jurisdiction and then the manufacturing Sweden, Germany and the Netherlands in another jurisdiction. So this has to be one jurisdiction, I think. It's a key interest, I think, from all of us to keep the UK in. Also, I think in the long run, France is agreeing on this issue that we need to keep the UK in our union. So the cooperation between the countries outside has strengthened tremendously over the last 6 months. The Sweden, Poland, the Czechs, the Danes are now cooperating much stronger than we ever have done before, because we need to have a somewhat more of a balance between the EU 27 and the euro area. But we are cooperating in a pro-European sense, in a pro-European spirit. We are not cooperating against the Eurozone, but cooperating to have a strong European Union also.
So on the UK, will the current union give Cameron his meaningful renegotiation?
Well, the US-EU free trade agreement is the best thing that could happen to this issue. If we would see a strong European-US free trade agreement, that would vitalize the single market, vitalize growth in Europe, and also show to the UK that this is where you have your home. This is where you have the positive reforms in terms of growth. So I think the fact that Barack Obama clearly stated that the US is interested should be met from Europe with a very strong interest of moving forward with a free trade agreement. So in that respect, I think we will have to load EU with much, and the euro area with much more growth contents to keep the Brits in. Yes, I do think that there could be a compromise where you do some treaty changes. I don't think that the Brits can fundamentally renegotiate the treaty, but if there is a need for some symbolic issue, yeah, that could be done.
And you're also saying that a transatlantic trade agreement would give Cameron something of an excuse to stay in.
Most definitely. Not only an excuse, but a very, very strong argument.
Strong justification, yeah. Yep. Nicola.
Thanks, Minister, for what was a very impressive presentation. I have two questions, one of semantics and one of perhaps more substance. The question of semantics is that in one of your slides you mentioned economic union, and I would like to, in a way you expanded on this, but I would like to ask you specifically what you have in mind when you talk about economic union, because my experience has been that different people have different things in mind when they talk about this. The question of more substance is, I was struck by how you answered Fred's first question on the global challenges by insisting on financial and banking regulation. At this point, it is clear that the European Union is in a different space from the US and the rest of the world when it comes to certain aspects of banking regulation, and I'm thinking, of course, of the cap on bonuses, the attitude to rating agencies, the financial transaction tax, a number of developments that we see gathering pace in a way in terms of European financial regulation. And I'd like to have your sense of where the EU is going and where the world is going in terms of financial regulation, and what you are happy with, what you're less happy with. Thank you very much.
Well, I have a pro-European starting point. I believe that European cooperation is good for Europe. We are a multicultural, multi-ethnical, multi-historical entity of different cultures, which I like. I mean, Europe is really building a social market economy with strong cultural heritage that is a very sympathetic society to my mind. But it is where we are at home. I mean, the political union of Europe is the kind of home for Sweden, home for Germany, and there is no other place to be in. So we have to be pro-European. I would argue that I don't have any original view on what we need on terms of the economic union. I mean, it's quite clear. You need the banking union in place. You need to strengthen fiscal cooperation. You need to invigorate growth and do to get the single market to work better. Well, I'm not certain that Europe is moving in its own direction when it comes to financial regulation. To my mind, I think the world is actually moving in the same direction. More capital, tougher risk weights, tougher resolution schemes, tougher demands on banks when it comes to payments and bonuses. Yes, Europe has been a little bit tougher on bonuses than the US, but on the overall scheme, I think we're moving on different paths towards a more stable and more well-regulated banking system.
Angel.
Angel Ubide from Peterson and the show. Thank you, Minister. This was very interesting, but I was struck by something you said. You said that you may need to accumulate more reserves, more foreign exchange reserves. Now, is this related to the fact that you feel your financial sector could be vulnerable to a liquidity, a global dollar liquidity issue, and so it would relate to the issue of having FX swaps and other arrangements at the more central bank level? Or is this because you feel that as a small open economy, you need a bigger insurance cushion that you can deploy at some point in case of a big crisis? Or is because you feel that because you have one of the best fundamentals out there, your currency will just unduly appreciate and would lead to a hollowing out of your manufacturing industry? And if so, is this the course of being virtuous, right? That maybe we are talking of a system which has exchange rates that are too flexible sometimes, and that you need to manage that. I was just, again, as I said, I was a little bit surprised by the statement about increasing the reserves. If you could elaborate a bit more on the why.
I agree with your first argument that we need it because we have this wholesale financing structure. I think more countries are likely to move in that direction because it's not very rational that the households are only keeping their savings and deposits. They should go into other assets that keep giving bigger return. So, but if you have high degree of wholesale financing, you have a liquidity problem. So I strongly agree with that. We have a big banking sector, which is obviously makes it important for us to have resources. We are also building a stability fund where the banks pay a bank stability fee, which is increasing quite rapid, that will be used for banking resolution. But I think better reserves is better also in this respect. And yes, I agree that there is a balance of payment management problem where the central bank can play a role. I've talked quite a lot with the central bankers in other countries that has gone through similar problems, Latin America, Israel, some of the Asians. It's extremely difficult to deal with such problems. So I think more reserves is better than less reserves. In the textbook world, you don't need reserves. But in the textbook world, solvency and credibility doesn't exist either. So, and I have to be in the real world, so I like reserves.
Well, Anders, you're deep in the real world, and we deeply appreciate your sharing so much of your thinking with us. As always, it's a fantastic conversation. We could go on for hours. We know you've got a lot to do here. We thank you very much for joining us once again at the Institute. It's great to see you, and we'll look forward to staying in very close touch.
Thanks
again.
Thank you very much.